Traders Gary Wagner here, just around 1 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 8th day of July, 2020, and this is the Daily Report for Gold and Silver. Historical upside moves in the precious metals, with gold breaking through $1,800 per ounce yesterday in the futures market, with follow-through buying today, taking it to an intraday high of $1,829 and currently trading around $1,819. Also, spot or forex gold breached the $1,800 mark, trading at around $1,808. On today's show, I will talk about our upside projections. We will also address forex traders and current spot pricing and where a stop should be placed for those that entered the trade using those markets. And then we will look at the ETFs, GLD, and Nugget. But first, to the price board. We are definitely witnessing history, with yesterday's climb in gold taking gold futures above $1,800 per ounce, and today's follow-through with futures trading higher and spot gold trading to 1808.50, the first time we've seen spot gold trade that high in quite some time. 17.80, that is the current price of August futures. That puts it up $7.90 on the day, a net gain of about 0.4%. Spot gold really surged higher as it gets closer to August futures, currently at 1808.50, a net gain of $13.63 per ounce. Platinum gained a little over 2%, 881.90. Palladium closed lower on the day by the tune of $16 and change, 1935, but it was silver that was the shining star today, gaining 2.33% and currently fixed at $19.13.5. We are also looking at Nugget and GLD as that has been added to our portfolio. Nugget gained a whopping 6.68% in trading today, a net gain per share of $5.52, and GLD outsurpassed gold futures by gaining 0.62% and is currently trading at $170 per share. And that was all with some strong dollar weakness, providing tailwinds moving the precious metals higher. Let's take a look at our current technical studies. Before we look at our daily charts and talk about our trade, I do want to look at a historical perspective. We are looking at a 2-week chart, continuous contract of futures. The area here that I've just circled represents the all-time record high. Of course, this is the triple top that we experienced following that, and current pricing as it stands today at $1,818.90. On a 2-week chart, we can see that we moved into the area of 1,800 on an intraday basis, meaning the high, but it wasn't until this last 2 weeks, and really this week and the last 2 days, that we have seen the market effectively close above $1,800 per ounce. And the gains over the last 2 days effectively have taken out this triple top here, and we can see definitively that it's been this last week that we actually breached that key psychological level and are now trading well above it to the tune of approximately $20 per ounce. Which brings us to our current futures trade, in which we recommended going long the August contract of gold. Traders taking that suggestion got in roughly at 1807 to 1808. We placed our stop below the low of the third day, which is this candle right here, 1766. I believe our stop is at 63. We will look to move that up shortly. We will also discuss stop placement for forex traders in just a moment. But first, I do want to take a look at our upside forecast to where we believe gold could head over the next couple of months. The forecast is a technically based forecast based upon Elliott Wave and Fibonacci extensions. What we are doing is simply looking at the move of gold from the beginning of Wave 3 to its conclusion And then we are doing an extension from the conclusion of wave 4 to forecast where we believe where wave 5 might conclude. You can see this blue 5, that is the automatic Elliott Waveget's forecast. This is our forecast. You can see they're coming in at the same price point. It's because we are using the same formula of a 618% extension of wave 3. There are two mathematical formulas that are accepted ways to forecast a fifth wave. The first one is a 1-to-1 extension of wave 1. The second technique is a 61.8% extension of the third wave. Both are accepted. But when forecasting with Elliott Wave, there are three laws you must follow. And one of them is that the third wave cannot be the shortest of any impulse wave, which means that wave 5 could in fact come just shy of a 1-to-1 relationship between wave 3 and wave 5, which is why it could go as high as 2075, and that is also a prediction with the GET system along with my forecast. So I think we are in for much higher pricing ahead. We are looking at a daily chart of spot or forex pricing. I do apologize for not putting a stop down for that yesterday. Traders who took the call got in roughly at 1791. That would be this candle here near the high of the market, which corresponds to the time that we entered the trade for our futures traders. In this case, I am recommending that you place your stop just below 1756.16. You can put it at around 1755. It's based on a 3-day low, but that is a current 3-day low. And I also recommend that you maintain your current long position. And lastly, a look at the Gold Trust GLD. That gained about 0.6%. It is currently tracking at 170.09. Traders, I recommend that we maintain all of our long positions. And for future and forex traders, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.